Indexes continued to sell down near their lows, but there are some buying opportunities out there. A lot of these opportunities that we're going to talk about, they're short-term based. It's about 10 of them. Some are in one major sector. I just want to point this out. Here's Nvidia. You're sitting right on a key level of Nvidia, 122.72. If we just take a look at this level here and we take a look at where we're at, we basically sat right on it today. Now, there is nothing long-term redeeming about this chart. Understand that. But we have two spots of confluence here. You have this March 2021 low, which we now have hit and held. You have this downward trend line that's not perfect, but what I like about it is we actually undercut it and then we closed above it. And that allows us to know that there's going to be some support at this level. So we have two periods right here where that's held. Now, this is a very simple idea. If you know your candlestick patterns, you'll know this pretty clear. This looks very much like a morning star. So all we're really looking to do is to flip above this level, push a little bit higher, and then see how we act in here. Am I saying that we're going all the way back up to 160? No, but you need to start somewhere. And we did see some of these stocks getting a little tired today, right? We did see some of those bear ETFs getting a little tired today. There's one sector where they're actually accelerating, and we're going to go over that. But when you start to see that, it does give you some indications that maybe selling's exhausted for a short period of time. This is the SOXS. This is the Bear 3X ETF. This is what you did today. So this is what happens with these kinds of funds. Everyone gets all excited and giddy. But if you really looked at this, you had to be in it for one day, or you just had to buy it and pray, which is not really a strategy. So now you're dealing with this huge wick up here. And now you also have to deal with how you're hanging in down here, right? So what is this telling us? It's telling us that we're in a position where at least we closed above the open, but this is not bullish, this move. This is a sign of exhaustion. There were some other signs of that. Now, if we drill into this a little bit, look at this on a 15-minute, you can see the doji right there. You can see how they pop you over, lure everybody in, and then what do? They bring it right back down. This is the name of the game. When you're in this type of environment, all they're trying to do is trigger breakout buyers. Just be aware of that. That's all they're trying to do to you, is trigger you to get you in so that then he can dump stock on you. And that's exactly what they did. And now you're holding this over the weekend, wondering if you did the right thing. Before we get into the next three ideas, I just want to take a moment and focus on what is actually happening here. So this is crude oil futures. And crude oil futures are actually the price that was driving the energy craze. And we saw those energy stocks doing exceptionally well. I just think it's pertinent to understand that you started the year and you were completely underwater in December, coming back up, getting to that 82 level, blowing through it, trading our way up, peaking here as we went into the Russian-Ukraine crisis, came back down as we all kind of thought we were a little overdone. But then what happens? We thought we might push higher. We don't. And now you just have continuous selling. And the selling's almost at a 45-degree angle, which tells us what? That it's mostly institutions that are just dumping. So the question is, why are they selling oil if we have the issues going on that we have going on? The bottom line is the majority of people out there think that the Fed is going to overshoot, meaning that they're going to continually raise rates a little too high. I'm not the only one that thinks that, and there are several economists out there on CNBC today that are saying the same thing. So whether that happens or not remains to be seen, but I think it's becoming abundantly clear. But understanding where you're at on crude oil and understanding that you are now below where you were on the breakout is pretty pertinent. And so is the 77.42 level, because if you break that, you've got nothing down here but air. You have a nice 10% move down. Cold is natural gas short, KOLD. Now this is one we were playing with a little bit earlier in the trading room. Times to really buy this are when it's breaking down, not when it's breaking out. So hopefully you see a little peak up and you can get a better price. But watch our little level right here and just watch how we act at that level. It's really important, right? That level is pretty significant. So we're going to watch that and use some other details that are kicking in here that I think are pertinent. This 50-day finally flipped, so now we're above the 50-day. We have not been above there since about July 4th, which was the last time, quite frankly, that we were at about $6.84 on natural gas futures. So you're in a position here where Yes, and this is because of their ETFs and they get eaten up. But if you flip here and start working your way higher, this could continue to go. And as these kinds of ideas work, this is an oil and gas exploration ETF bear. This has been the best performing sector out there. And the good thing about this, as energy prices drop, GDP can go up. Why? Because earnings can go up. If earnings can go up and people get more money coming in their pocket, it's a good thing. You might see energy EPS drop, which could affect GDP, but the effect on the consumer side is actually good. So if you take a look at these levels, it doesn't get much cleaner. Maybe we can get back to this 2581 level, but just keep these on your radar. The volume that came in today is pretty substantial. Complete different outlook than what we saw with the SOX, right? So in other words, we're seeing people come out of this energy trade. Now, when you look at GDP, when you look at SPY earnings, right, the S&P earnings, you have to equate for where the cost of oil is. So if oil continues to come down, that helps us out greatly with the issues that we're dealing with. So just watch this level very, very closely. But if you can flip up here, watch out what happens if you get up to here. I think it's very realistic for us to get up to that 2581 level, but we're going to have to see how this continues. And we'll see what types of developments come out. ERY is an energy bear fund. It's a 2X fund. Now, this focuses more on the entire energy sector, where the other was more gas and exploration and oil exploration. And it just gives you different exposures. You can always look up the holdings. But if you see this, again, here's the 50, here we are, and we flip that 4781, and we look like we're going to push. Where this goes, I think that if you look at this, it's the exact inverse of XLE. So here's XLE. I mean, it's pretty clear what's going on here, right? These were the notes from the newsletter. If you don't get the newsletter, there is a link in description. But if you just focus on this, could you get to 65, 10%? Yeah, you could get that. You could get to that 65 very quickly. Now, if you take that into account and you flip it back, where does that put us? That puts us up here. So you could see that 61 again. You could see that level. It'd be good for the economy. And quite frankly, if we're coming out of inflationary times, which we all hope that we are, we really don't want energy to lead. Okay, we really don't. We want another leading sector. What that sector is going to be, I have a couple ideas. I think it might be something in the financial space, but we're going to have to see how that plays out. But we definitely don't want it to be energy. Now, in this kind of environment, we are looking for different kinds of trades. We're looking to get up and to get in them and then try to stay in them. And so when you're looking at this, as we're about to go over the indexes at the end, I would focus highly on stocks that are above that 50 SMA. Now, this is not something that I would be looking at and saying, I can't wait to get in. We're going to break out. We're going to run. Why am I interested in this now? Because here is my open. I closed above my open. Did the SPY close above its open? No, the SPY was down 2% today. So now I have something that has high relative strength and has institutional sponsorship. How do we know? Institutions buy where? At the 50-day moving average. This allows us to get involved in names such as this when they pull back to these levels, get in and try to get up, and then maybe we can see if it challenges up here. But the goal is to get up in here, and we'll know when we're wrong very, very quickly. Now, if you look at this on a weekly basis, you can see your support level right here very clearly. You can see how you held that support, which is exactly what you want to see. And if you take a look here, you have this huge flag. So you have a DTL, downward trend line. We flip that, we form this flag, and we're just bouncing in here. Again, when you're going in through a market like this, and we're going to go through the indicators at the end and go through the indexes at the end, I want to cover the VIX as well. You can't be thinking you're going to get breakouts. So in other words, you can't be buying this with the intent that you're going to get up to here and break out. You have to get up, scale out of it, make a little money, move your stop to something that's either break even or a little below that to break even on the trade, and then see if it plays itself out. Very different game that we were playing a year ago. Wolf, same story. See your support level right here at this 105.50. You pull back, you're green. In other words, why are we green? Well, besides closing above the previous day close, which not a lot of stocks did today, and I would take note of the ones that did. You opened, pulled back, tested support, flipped, and then closed at the high of the day. Not many stocks are out there closing at the high of the day right now. When this happens, you want to pay attention. So you want to see how you're acting here. But if you look at those candlestick patterns, and you've been watching these videos for some time, which I hope you have, you'll notice that this is very kind of wonky Morningstar, but that pattern's sitting right there. So flipping this level, and we could see if we could push ourselves back all the way up to here to that DTL downward trend line. Looking at this on the weekly, you can see the flag much clearer. You can see your downward trend line much clearer. You can see the rejection here, and you can see 2 points of resistance. Again, what we're looking to do is get up and in and see if we can hold on to it. If not, it's very clear where our stop's going to be on something like this. REGN had some powerful news on 2 trials earlier this month. Stock rallies up, pulls back, comes all the way back down, and you can see how we're getting tighter and tighter in here. But again, this is what you need to focus on. If you have a market that's down 2%, which we are today, and you just kind of come across here and see that level very, very clearly, bonk, 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 right? This is exactly what you want to see. You have a support level. Support has been tested. We undercut. If people truly wanted out, this was their out right here. They didn't sell. A matter of fact, what we had here is we came down, held this level, undercut, flipped the level, and then the next day we fill in that wick. I don't know many ideas out there that are closing like this right now, where you're closing at a 3-day high. There's not many stocks out there that are doing that. So you want to look for the anomalies because that tells you where the money's going and tells you what the new leaders may be, especially if they have a pattern like this, right? So you have this pattern that's been going on for about a year where you're going sideways essentially. Let me just highlight this even more so that you can see this. You're in this range going straight across, right? Come down and you hold it. So obviously resistance has flipped to support. Now, all we're really looking to do is seeing how you're going to act here. Can we continue to push? Can we get up and over? And then you want to look for that 718, 720 level. If you can get over that, you can challenge the high of this in 750, and you could be looking at something that could be one of the new leaders out there. Here on the monthly, I mean, it doesn't get much cleaner if you just come straight across and look. Tries to get over, fails, tries to get over, fails, closes over again. So you just want to make sure that you don't have some kind of reversal pattern here. But as long as you don't, you look like you're in great shape. And this is what you want to see. You want to start looking for those new leaders. SRG is one that we did in the newsletter. This is the day they came out and said they were going to sell the company or sell the assets of the company. And if you do the book value, it's roughly around $17. So even if they liquidate, you're expecting to get around there. Now, people are selling the stock down because they think that real estate's going to zero again because of what's going out there in the world right now with the economy. I'm not so sure I agree with that assessment. Sometimes things get a little more irrational and can stay irrational longer than people can stay liquid, and that affects their decision-making process. The stock was down here at one point, was actually trading, about 30 cents of book value. So sometimes things can get a little goofy. Now they have new leases on some of their projects. They seem to be going, well, we're looking for a very simple trade. Are we going to hold this level and flip this doji, or are we not? And if it does do that, holds in here, flips that doji, then yeah, maybe we can get up to that $12 range. And if you can get up there after flipping that doji, that's not a bad trade in this market, right? You'd be looking at 35% in a REIT that has already said that they're going to sell their assets. The reason that you won't go near something like this is if you believe that commercial real estate is basically going to come in a lot harder. I personally think that we're at levels where the sector is trading grossly under book value in general. ENPH has been pretty much a darling all year long, hanging in there. One of the only stocks that you're really trading up and above. Now, if you just kind of go back here and look at this November high, you can see how that's pretty much been our level. What I like about this is I have 2 points of confluence. So I have this peak right here. We know wicks are price rejection, hanging in here, been fighting that battle over and over again, right? Gets below it, pops back over. Gets below it, pops back over. Gets below it, maybe we pop back over. Maybe we flip that 50 and we flip this level, and then we can complete this pattern and see what happens when we get into the mid 300s. That is a possibility. So this is the hottest sector that's out there right now. It is still the best performing sector of the year. Very few stocks are this close to their 52-week highs. There's only a couple. There's only a handful. Your level becomes a lot clearer. Looking at this on the weekly, you can see how this flag just pops out, and now you have this high, tight flag up here waiting to push higher, and we have nothing but blue skies above. Again, very few stocks look like this right now. Same with First Solar. This entire space, what we expect to see is we expect to see these names come in and come in hard. That's not what we're seeing. Now we're looking at the weekly right now, and just to point this in perspective, yes, you're down on the week. Yes, you closed at a lower low, but you're still very close to the all-time highs on these names. You're not breaking. Now that doesn't mean that you can't eventually break, but it does mean that you're not breaking now. And if you take a look at this, you really couldn't ask for a better setup. We have our downward trend line that we're holding. We have a little doji that we're trying to form right there. If you clone these, set this in here perfectly, you can see how you hit here 4 times, tried to get over, forms that doji, and you're setting up here. So if we can flip over this doji, see how we act at the top of this range, and maybe we can push again should the market bounce just a little bit, which is possible for the market to bounce. I know it does not feel that way right now. Now, I think it's pertinent for us just to review the indexes. None of this is really going to work very strong if the indexes continue to dump. If we're down 2-3% consistently, it's not going to work. The good news is that's not realistic. So if you take a look at where you are in 3 days, and where you're at now, you're down about 7% in 3 days on the S&P. That's not very realistic for something like that to continue. It'd be at 0 by the end of the month, which is probably not where we're going to be, right? So if you look at that, you see how we dropped even from up here for 2 weeks. Right now, you're definitely in double-digit losses. And let's take a look at those losses right now. So now you're at about a 12% loss during that period of time, which is about 2 weeks. The chances of this continuing that level of selling are very light. Now, there are some signs that you are going to have to watch. Here we are on the weekly. There's nothing redeeming about this. Like, you're not going to look at this and go, oh, good. I really like the way the market looks right now. I mean, you can see this right here pretty clear, right? And some of these channels are very defined. And if you look at them, quite frankly, you're actually setting up and getting wider on them, right? I'd like to use that line right there. And you can actually see this is getting wider. So it's not like, oh, good. But there's nothing redeeming about this. What I'm simply saying is that when you drop this fast, you usually get some kind of bounce. If you don't, then you're just going to sell off very, very fast and just stay out of the way and let it happen. There are some signs that you're in a position here where you could sell down very fast, and that's because of the way that this is starting to pick up steam. If you take a look at where we are using a 15-minute chart, just to walk through this, this is not normal. Fed or not Fed, this is not normal. For us to have a 3% drop, a 2.5% up, a 4% drop, this is not normal. Okay, not in this span of time. So when you have huge volatility moves like this, you want to pay attention because it means that another large volatility move is coming. We just don't know which direction and when. Most people are betting that that move is going to be to the downside. If you look at that chart, you'd have to conclude that they're right. But we don't know the answer to that. But we do know something is coming and we do know something is out there. I also know that we are grossly oversold right now. And that is definitely something that we're continually focused on. But when you focus on this, just understand, maybe you're coming down here to test this. Maybe you're going to hold. Maybe you're going to not. If this sells down, you're going to want to look towards more the bear ETFs from energy that we just went over, because it's very clear that the market's going to come down more on recessionary fears than the higher cost of oil right now, which is going to put pressure on energy. And they would be the names I'd focus on. I would pay very close attention to the VIX, very close attention to the VIX. So again, there's a link in the description for this, but what we want to focus on is we went to 3 handle. Well, we're getting our 3 handle. We're getting that higher high. Now we're at 32.30. Give me a 4 handle, and then we can call it a wrap. So that's really what we're shooting for, to get something up here. Now, the fact that we're starting to see this is exactly what we want to see. We want to see that panic. We want to see that fear. We want people buying puts. I want to hear how everybody's buying puts right now to protect their capital. That gives us a sign of where people's minds are. And then that fear will expedite any kind of correction because the panic will set in. And then at a minimum, we may be able to get some kind of short-term bottom to work off of. So that's all I have for this evening. Enrollment in the trading community, if you're interested, is up here in the top right corner. The community will be open for the next 5 days, and then I will close it for an undisclosed period of time. If you click the link, it'll walk you through the community and what is included in it. That's all I have. Everybody, have a great weekend and trade to win.